Used car prices, especially on the wholesale side, are getting crushed, Dad. And we looked at some new data that is making us think that used car prices could go down even more because so many people are actually beginning to be underwater on their trade-ins. Interesting new data from Edmunds here, a lot of anecdotes that you can share from folks who were previously underwater. Can you help us understand what's going on and why we think this could actually push used car prices down more in 2023?
Well, we're seeing something that we talked about in 2021, 2022, when people were buying cars at elevated pricing.
Yep.
That they needed to make sure that they had gap insurance when they bought the car, because at some point we were going to return to normal depreciation levels on vehicles.
Yep.
And when that happens, and it's happening now, all those people who paid way too much will suddenly find themselves, as we call in the industry, being underwater. In other words, they owe much more on their vehicles presently than what they're worth. It's negative equity. And so in Q4, we have seen negative equity rear its ugly head when it comes to people trying to trade in their cars. And it makes it much more difficult for them to trade it in because suddenly they've got to come up with big hunks of money. In order to get into a new loan.
All right, I'm going to read what Edmunds put out in their press release in just a second here. And I want to remind everyone, if you are going to trade in a car, we can help you with that. Go back to joinyaa.com. We can help you get a cash offer for your vehicle. Our coaches can help you get the right price, all that fun stuff. Quote, Edmunds analysts caution that the combination of costlier vehicle financing and cooling used car values could spell trouble for some consumers down the road if they do not budget or plan accordingly. Edmunds experts conducted a deeper dive into the share of new vehicle sales with a trade-in that had negative equity in Q4 2022, which reveals 17.4% of new vehicle sales with the trade-in had negative equity in Q4 2022, compared to 14.9% in Q4 2021, the kicker here, and 31.5% in Q4 2020.
And the reason that it was 31.5% in Q4 of 2020 is because 2020 was still reflective of normal historical depreciation levels that you expected for an automobile. Automobiles have always been a depreciating asset. And over the last 18 months or so, 24 months, they haven't depreciated at the rate that they normally would have. And in many cases, they actually appreciated. And what we're seeing today is that correction finally starting to fall back into place, where vehicles are going to be depreciating at what had been historical norms. Now, what that means is that it's going to happen faster because we have to get back to those historical norms. So my suspicion is in Q4 of 2023, that number will probably be well above 31.5% of people trying to trade in a car will have negative equity, because those are the people that will have grown tired of the cars that they purchased in 2021, 2022. They're going to get hammered with a sledge. Hammer.
And now let's be very clear. You said for 18, 24 months, we saw used cars not follow a normal depreciation pattern. To be very clear, the past 4 months or so, we have seen used car prices, wholesale used car prices and retail decline. So those normal patterns of depreciation are coming back and even stronger than they had previously been in prior years.
What we're seeing is the correction started in July.
Of last year.
Last year. And over the last 4 months, it has sped up. And the speed at which it is gathering pace is much faster than what historically would have been happening.
Definitely, yeah.
Okay. Our dear friends at Black Book suggested that wholesale values would have declined, or will have declined, about 21% in 2022. Normally, it is expected that values decline 12 to 16% in a given year, somewhere around 1% to 1.25% a month. Well, in the last 4 months of the year, that number was much more substantial than the normal 1 to 1.25%. And we will see that continue in 2023.
Thinking about getting auto insurance? Compare quotes from all the major carriers in one place. Join YAA.com/insurance. It's quick, easy, and no spam.
Let's hit on the other data point here, and then let's talk about why we think this is going to continue to put pressure on car prices to go down. First, from Edmunds, quote, the average amount owed on upside down loans was $5,341 in Q4 2022 compared to $4,141 in Q4 2021 and $5,059 in Q4 2020. The amount that people are going to be upside down will also continue to increase as the, what goes up must come down as we see the normalization in the market return. Now, why do we think that this is going to continue to put downward pressure on used car prices? I have one hypothesis. Do you want to hear that, or do you want to go first?
No, you can go.
I think that more and more people, especially those that like watch videos like this, try and get more information before they go into the dealership. They are going to run trade-in values, black book values, CarWiser, values. Are going to do that. They're going to say, "Oh crap, I'm $6,000 underwater on this car. I want to go buy that new vehicle, but you know what? I'll just keep driving this thing." So it's going to take people out of the market. You take demand out of the market, you ultimately have prices go down.
Another factor will be the fact that banks aren't going to be willing to finance as much of that negative equity moving forward as they have been in the past, which is going to require people to put more money down that they don't have. When you consider that 60% of all Americans don't have $500 in the bank for an emergency, well, those same people, if they wanted to get rid of their car and they're the proud owners of $6,000 in negative equity, and the bank says, well, we need $4,000 or $5,000 down in order to entertain a new loan for you. Well, if they can't come up with $500 for an emergency, how are they going to come up with $5,000 or $6,000 to get into a car? That's going to take more and more people out of the marketplace. The inventories of both new and used cars are going to grow. In order to sell both new and used cars, dealers are going to have to discount them and lower the pricing of them, which further exacerbates the negative equity situation that people
That'll continue to devalue the car they already own that they bought in 2022 or late 2021. So this is an interesting storyline. Let us know in the comments down below how you feel about it. We think this is one of the strongest leading indicators of major issues on the horizon. So many people. I mean, how many vehicles were sold last year? I don't have the data. Brandon, maybe as you're editing this, you can pull it up. But I mean, tens of millions of vehicles were sold last year. And it was a slow year, but it was still probably like 30 or 35 million vehicles. Typically, it's supposed to be closer to 40. Probably
somewhere around 13.5 million new cars and the rest pre-owned.
At least 17 to 20 million used cars.
It's
a lot of people. 87% of people finance. That's a lot of people who are underwater on their cars. And this latest data from Edmunds, it's starting to show that return to normalcy, which is going to be a sad storyline throughout 2023 and beyond.
And one of the things that Edmunds suggests, and we've been suggesting for quite some time, is that people continually make themselves aware as to what the current value is of their current vehicle. And you should be checking that on a monthly basis so you have some idea as to where you're at. And truth be told, if you have $5,000 worth of negative equity today, you'll probably have $7,000 of negative equity 4 or 5 months from now. It's only going to get worse.
Sad to say. All right, Pops, thanks for your time as always.
Thank you.